What's happening? What's going on, everybody? This is Train G's with G here on YouTube. Welcome back to all my subscribers, all the new people. Thank you for subscribing to my channel. Tonight, it's March 5th, 2025. This is episode 5 of my free trading tips series. Tonight, this one is titled Earnings Calendar. So, anytime you are trading or investing in a stock market, every 3 months, a company has an earnings call. Why is this important? For one, prices can jump up and down depending on the earnings per share and the revenue of a company. I'm going to be using Broadcom as my example tonight. So, Avago is one of the biggest tech stocks, one of the biggest companies in the whole United States. Tomorrow, March 6th, this company will be reporting their earnings. Now, a company can report their earnings before the market opens or pre-market or after the market closes. In this case, right here, after the close, after 1 o'clock, around 1:15, Avago will report their earnings per share and the revenue. So every 3 months, like I said, there's going to be an estimate, and this doesn't mean you should be trading if you're doing options. If you are doing options trading or trying to swing trade a stock, this is straight gambling. This is not something that you would really want to partake in, because it could either make you or break you. So a company's earnings is always going to be measured based on the revenue, the money that they bring in every single quarter. So it is very, very important every single weekend. Personally, me, every Saturday, every Sunday, I look at this website, Earnings Whispers. You can check it out on Google. There's other websites that have earnings calendars, and pretty much every single day, every single week, it updates with the companies that are having their earnings calls. I'm going to show you how this works. So, last quarter with Avago Broadcom, December 12th, this thing jumped out the water. It went up $44. $44 after earnings. It started right over here at like 180, and it shot all the way up the next day to as high as 229. Then the day after that, 250. Their earnings hit. As you can see right here, this is, of course, Trading View. It has a date. It has a date that the quarter ended right over here. And then right over here is your earnings estimate down here. And this was what we reported, obviously, when the earnings were there for. And with your revenue, it's the same thing. The estimate that the analysts are putting up, the analysts come up with their own opinions. Do they think the company hit or miss? And obviously, this is what dictates a stock's price. And if you notice down here, this is my volume indicator right here, over here. So as you notice on earnings day or day after, the volume picks up very, very much. So if you're doing options, prices will jump through the roof. I'm going to get to that towards the end of the video. So tomorrow, like I said, March 6th is the earnings call for Avago Broadcom. And there's no telling what's going to happen. Me personally, I sit out of these plays. I'll wait till at least a day after to a week after earnings before I get back into trading options. Like I said, it's better to play safe than dangerous when you are trading or investing in the stock market. I'm going to give you like a brief kind of description of what goes away, so about what goes down. So pretty much a company's earnings are its after-tax net income or profits in a given quarter or fiscal year. Earnings are crucial when assessing companies' profitability and are a major factor in determining a company's stock price. Earnings per share is a company's net income or earnings divided by the number of common shares outstanding. Earnings show how much a company earns for each share, with a higher EPS indicating the stock has a higher value when compared to others in its industry. Corporations are required to report quarterly results, but EPS tends to get the most attention from investors, particularly when the EPS either beats, matches, or misses what stock analysts have been forecasting. So that's the technical term here on Investopedia. Like I said, y'all, I'm not a financial advisor. I have to make a disclaimer. I'm going to have to say this real quick because this is very important. You can really get broken or destroyed, or you can get lucky doing any type of option. So here it goes. Listen to the dreadhead trader with a grain of black salt. Anything that I say, do not trust 100%. Do your own due diligence. Be your own designated driver. Just know that I have your best interest and I always keep it 100. So with that being said, so this is Market Watch. You have to eventually get to the point, if you're a beginning investor or trader, of looking up these numbers yourself. I'm not going to get too much into that, but this is the Avago Broadcom Financials. You're going to find your revenue and your earnings per share in the income statement. You can also look at a company's balance sheet. You can also look at a company's cash flow. These are 3 categories of financials that are linked to earnings. Every 3 months, every quarter, 4 times a year, a company is going to update this, and by law, they have to do this. The SEC requires companies to do this. There is no telling what can happen tomorrow. Either this company can go up or down. By the way, Broadcom has been doing it. They're going to beat earnings, but that does not mean the price is going to go up. Investors and traders can start dumping tomorrow morning or right before the end of market or after market when this is announced, and it can tank. So that's why it is extremely, extremely important not to options trade during investing. And over here, I have my own personal hit list. So when you get this app TradingView, when you trade, this is like a red flag category. That's default, and I like to personally red flag all the stocks that are giving out their earnings call throughout the week, because I do not want to get wrecked. I do not want to buy an options contract that's overpriced. I'm gonna give you an example of this right over here, and I'll be done with the video. So this is Broadcom on bar chart. This is the most recent contract that's about to expire on Friday. These contracts all expire Friday, March 7th. And the current price as of today is $191.58. All of the green are in the money options. All the yellow are out of money options. So the price 191 something is right up in here. And I look at this stock all the time with the options. Anywhere from $906 to $1,000 is the current price for right in the money, and right out the money is $835 to $865. You just have to times these decimals by 100, y'all. Don't get confused. I don't know why the market makers make it like this. The market makers raise the prices of these options during earnings week. A week before, especially a few days before, or the week of, they will shoot these prices up. These prices are normally not this expensive. I would say it's about maybe a few $100 less with Avago. Ever since last quarter in October, the prices have been around $500 to $700 for one contract, about right at the money. But now that it's so high, right before earnings, you're looking at spending anywhere from $800 to thousands of dollars for in the money. And look at the volume over here for all these prices over here. These are calls, and down here are puts. So you got volume and open interest. This all increases the week of. Implied volatility, all these well over 100% for calls and puts. It is good to use implied volatility if you're already in a play and you're on the good side, if you're on the positive side making profit. But if you're just trying to jump in hopscotch at the last second, you're most likely gonna lose the bet. If you win, hey, congratulations. But like I said, y'all, make sure that you journal down every single trade that you do. Make sure that you go on this website, Earnings Whispers, and look up these earning calls with these companies, because you do not want to overpay for prices and you do not want to lose a ton of money trading. Until next time, y'all, this your boy, Train G's with G. I'm out.